Hi everyone, my name is Marsha, and today with me I have Sani Hamid. So Sani is the director from FA Advisory, and also he's in charge of the investment committee of FA Advisory, right? So
Yes.
hi Sani. But before we proceed, can you introduce yourself a little bit more, and then also maybe your experience on finance or investments?
Okay, thank you for doing this. It's excellent initiative. Okay, so as you said, my name is Sani Hamid. Basically, I have over 20 years of experience. I did my basic degree in Singapore in a university called Nanyang Technological University, Bachelor in Business. I carried on to do my master's in applied economics in NUS. I've been working for the longest time and multiple positions. One of the last positions which I took before coming to financial advisory or financial alliance was with Standard & Poor's. That's the rating agencies. It's quite well known. And now I'm the investment director here in Financial Alliance in Singapore and also FA Advisory in Malaysia. So I take care of what we call determining the portfolios for all the clients, where to invest, whether America is good, whether Europe is good, whether emerging markets is good, so on and so forth.
Wow, okay, that's a lot of experience. So today I managed to catch your time because recently EPF launched a new feature which is called the iInvest. So iInvest is basically a tool that it allows DIY investors to use their EPF money to invest into unit trust funds. So I would like to take this opportunity to ask about your opinion. Should someone use their EPF money to invest in unit trust? Because EPF gives a reasonably good dividend of around 6% recently, right?
Yep.
So is it okay to invest in unit trust using EPF money?
Yes, I think first thing first, as you correctly mentioned, EPF provides a very good return, 6-7% around it historically. So the big question is always, if I take money out from this EPF, which is risk-free, so to say, and can I find something which I can get better returns, right? And of course, in the unit trust world, where there are both stocks and bonds, equities and bonds, you will find that certain unit trusts in certain times will give you better returns than this 6 or 7. So the trick is to find these gems.
Right.
Maybe it could be at a certain point in time China has huge potential, will give you double digits return. Maybe in the past 6 months, for example, gold has run up and it's given you about 30% returns over a very short period of time. So basically it's the ability to identify such opportunities that would compel one to take their EPF out to actually invest. The other thing is basically EPF, although it's giving about 5-6-7% returns, someone could actually put together what we call a portfolio which could return much more than that.
All right. So as I understand EPF, we are investing for a very long term until we retire at least the age of 55 years old. So if we invest in unit trusts on a short-term basis, probably there are people that wants to look at short-term returns. Is there a pitfall to it?
Yeah, I would say that when you invest short term, you must actually, whether it's using EPF, cash or any other things, you must understand that this is really a very high risk, high return strategy. So it doesn't suit everybody. So you really have to sit down and understand what your risk profile is. If you're the type of person who can't take risks, or you're at this stage of your life where you really are about to retire, you have a lot of commitment, then basically this type of investment doesn't suit you.
Right.
But otherwise, I guess if you are the type whereby you know what you're doing, you can take some risk. This is not everything that you have. This is just a small portion of what you have. Then that's fine.
So you're saying that because EPF, there is a limit on how much you can withdraw for these investments. Do you think I should utilize the whole account?
So actually it really depends, because if you're someone who, for example, the EPF is the only thing that you have, you don't have other investments. So if the EPF makes up, let's say, 80 or 90% of your total investable amount, then basically you do not want to really over risk this particular portfolio. But let's say your EPF is a small portion, and out there you have have other things,
Right.
you have other investments, and the EPF only makes up about 10% of whatever you can come out from the EPF is only 10% of your total investable amount.
Right.
You know, so then you can take a little bit more risk.
Yep.
However, having said that, again, with the spirit of the EPF, as you mentioned, is meant for long term. I think the EPF themselves would want you to try and manage it or invest it for the long term rather than use it for speculative purposes.
Yep, I agree with that. Then, actually, I have another question that, as a EPF member myself, is it worth my time to invest in unit trusts separately? Is it worth my time for the difference, for the extra returns that I can get? Or should I just leave it there? Because there are still some group of investors that are slightly more passive or slightly more risk adverse. What's your thought on that?
So as I mentioned, really, if you think there are opportunities out there where you can get a return higher than that is what is given by the EPF, plus with less volatility, or we said, a risk-adjusted return, because EPF is basically 6-7% with no risk.
Right.
So if you can find something which is 6-7% but with risk, then keep it in the EPF.
Right.
Correct? So, but if you can find something about 8-9-10% double digit with a little bit more risk, then maybe it's still okay to take it out to use it. So basically, it's really an assessment and the person's own ability.
Right.
For someone who isn't used to investing, then basically I would say that you better make sure that if you take it out, you know what to invest in, and you're not just following whatever someone says and stuff. Because otherwise, keeping in the EPF is relatively safe and the returns are not bad.
Right. Okay. So to wrap things up, do you have any general thoughts on the market right now? Because there are a lot of news saying that the market is very bearish, and also there's the inverted yield curve that's happening right now. So maybe just a general statement of what's going on.
So I think investing, it's really quite tricky nowadays. We are already in what we call a very long upcycle since the last bottom in the global financial crisis in March 2009. Now it's about 10 years already. If you believe that economies go up and down, we've seen a very nice up. So a lot of people are expecting a down to come, i.e. a recession or a slowdown in growth, which is already happening, as you correctly mentioned. So as an investor, you really need to be aware of this. You can still invest, but you really need to manage the risk. You really do not want to be caught out where you are fully invested, market turns down, you are what we call holding the baby at the top, and you could be holding it for quite some time, because as the market comes down, the recession sets in. It may take about 2, 3, 4 years for it to recover. So you just have to be aware of that kind of risk. Right. So if you're a DIY investor, you need to take care of that risk yourselves. But if you think you don't understand these kind of things, then always go to a financial consultant or financial advisor who will be able to help you, because he's trained to do so.
All right. So thank you very much for your time, Sani. Okay. So I'll see you in the next one. Okay. Thanks.